Hi everyone, welcome to this new video. I've prepared for you today the recap of the year 2024, so without further ado, let's dive into it. First of all, I wanted to present myself for those who don't know me. I'm 𝙒𝙤𝙧𝙡𝙀𝙪. I'm a CFO with over 5 years of experience in 2 different countries, one in Mexico and Central America, and now in Australia and New Zealand. I've been working in a finance department of an engineering company for over 9 years now, in 5 different countries and 4 different continents. My financial background has a law and business degree in Spain, as well as a master's degree, and I have a value investing certificate from Colombia, and I have passed with merit the CC certificate that eToro requests to be an elite popular investor. Now, speaking about the strategy, we have a very thoughtful strategy that we have prepared to overcome drawdowns and to make the most profit out of a bull market. It consists in investing in great companies that the market doesn't understand completely. That's why sometimes the market is short-sighted and it doesn't understand what the long-term prospects of a company are. So we try to understand how the business makes money, and we try to understand what's the price that we should pay for it to be a full owner of the company. If the price that the market is offering to us today is lower than the value that we should expect of a business in the long term, we buy it and we become owners of the business. So how the process works? First of all, we screen for ideas every day. We are trying to look into the market to understand companies, learn about them, and do all the research that we have to do about them to understand them first, so we can be able to understand the value of that company in the long term. Otherwise, if you don't know the company, you can't value it. So first, what I would do is have a brief analysis of the company, so I can understand how it makes money, what's the management, how they are doing, if they are aligned with us or not. And then after that, we dive into a deeper analysis, trying to understand all the levers that the company has to make money, what's their work to be profitable in the short term, and what's the job that they are doing to be more profitable in the long term. That way we arrive to a valuation and we compare it with the price. If the price, again, is lower than the value that we think that the company should have, then we include it in our portfolio. After the company has been included in the portfolio, I have to reevaluate it constantly, every quarter. Of course, a company doesn't change much in a quarter, but if there are substantial changes, I probably have to reevaluate the company, and maybe we can sell it or maybe not. Of course, every time that we buy a company with a lower price than its value, it's because there's something wrong in the short term that is scaring investors. That's why we need to be patient, and we need to let the company and the management of the company develop their strategy so they can unleash that value for us. Once a company is in price, that means that the price and the value are the same, we may exit the company, we may sell it if the price is right. So again, I'm focused on investing for growth, but also for safety. I have my savings invested on eToro along with your money. So the strategy has to focus not only in growing, but only in keeping the money that we have achieved to save during our lifetime. For me, then it's important not only to keep the money, not only to grow the money, but also to keep the money. And how do we achieve that? We achieve that investing with a margin of safety. That means that if a company is worth $1 million, I may need a price of 700,000 to buy it, so I can have 300,000 as a margin of safety. So if I'm wrong in my analysis, or if something goes wrong in the company, then we are safe because still we have bought it at a discount to its price. Now, I think it's time to speak about why stocks, because I mainly invest in stocks, and my copiers, that's you also invest in stocks with me. Why? Why stocks? Why is it the asset that I choose to put my money and invest it to grow my wealth and to grow your wealth? What's the advantage of stocks over any other asset? Well, historically, stocks have offered the most sustainable returns of all asset kinds. Over the long run, it beats all other alternatives, including bonds, gold, any other asset that you may think about historically. For instance, sometimes it is said that bonds are less volatile than stocks, and that's true in the short term. As this graphic shows, you can see here that stocks in the short term offer more performance, but also it can have a bigger drawdown. However, if your time or horizon is long enough, that is 10 or 20 years from now, you see that not only stocks, which is the green bar, offer greater returns, but also it offers a lower drawdown. It has always had a positive return in a 20-year rolling period, and it has also offered lower drawdowns than bonds. So the worst case scenario for stocks is better than the worst case scenario for bonds, and the best case scenario for stocks is much better than the best case scenario for bonds. So that means that if you invest in stocks, you are not only having the best returns that you could expect of an asset class, but you can also have the safest approach to investing. Of course, if your time horizon is long enough. And this is the graphic from the 1800s to today, well, to 2021, of how stocks have behaved and what is a dollar invested in every asset class, what it would be today. As you can see, there's a huge difference in monetary terms, but also in percentage annualized returns. So that's why I choose to invest in stocks all my wealth. And now, talking about performance, let's see how since 2020 the portfolio has performed. This has been the historical returns of the portfolio compared with the S&P 500. You can see here that so the performance of the portfolio is the dark blue line, and the S&P 500 is the light blue line. As you can see, we have beaten the S&P 500 almost every year, but in 2021, where the stock market performed better than us. But in the long term, we have obtained a much better result than the S&P 500. Since inception, our portfolio has returned over 113%, while the S&P 500 has only returned 76%. That's a difference of 37% in a 5-year span, which I think is pretty good for portfolio and for wealth, of course. And now let's let's consider how the market is performing today. What's the market looking like? I have highlighted three things. First, that there's an expensive market that we are going through right now, especially in the US. But our portfolio is quite cheap, especially compared with the US stock market. And that means that we have very good prospects for the portfolio, and I think that the portfolio is going to perform really well in the future. So jumping into the market, this graphic compares the PE valuations of the US stock market to its historical levels. So as you can see, all the Nasdaq and the S&P 500 are the most expensive that they have ever been in the last 20 years. This means that the performance that the S&P 500 and the Nasdaq have had are not only due to better earnings, which it is, but also to a more expensive stock. That means that if there's a lot of growth considered into the valuation of the companies in the US, especially the big ones, and if they don't realize in the future, they probably will have an impact both lowering earnings and lowering the PE, which means it will become a period where there won't be such great returns in general in the market. And now this is comparing the light blue line is the US tech stocks, and the other line is the US excluding tech stocks. We can see that both lines are pretty expensive. The excluding tech stocks is probably priced in line with the dot-com bubble, kind of. And the blue line is still far from the dot-com bubble valuation, but it's still higher than every other period in history. That means that the US market is historically expensive, and that's why our portfolio has been rotating towards some other continents and countries. So as you can see, as I have been saying, our portfolio is much cheaper than the US stock market. Here's the forward PE valuation for the biggest companies within our portfolio. As you can see, there are several of them which are single digit and still growing, which is hard to see in the US stock market. But then you also have companies that are priced in line with the US stock market, but the growth that they are offering us today is much bigger than the growth that the average business in the US is offering to investors. So for instance, we have Wise with a forward price valuation of almost 30 times earnings, but they are offering a growth of over 40%, although it's been slowing down, and it's gonna be probably in the future it's gonna be more like at 20%, but still it's much higher than the growth that US stock market is offering to us today. And of course you have the biggest company in our portfolio, which is Alibaba, which has been cheap for several years, and I have holding it for several years. And I think that with the stimuli that the Chinese government is introducing into the market these days, and they are pushing towards repurchases of stocks to the Chinese companies, I think that it will be a catalyst for the value to realize, and I think that the Chinese market in general and Alibaba in specific are going to have a very, very long bull run. So again, as I said before, there are good prospects for our portfolio. I think that we are focused on applying a very good strategy that has worked over time. It has worked for us, but it has also worked for the best investors of history. And I'm seeking an average annual return of over 15%, which we have achieved in the last 5 years. And this has always been and will always be with safety first. That means we're applying a margin of safety to every investment that we make. That's the way we are protecting first our capital, and then we are being aggressive to obtain returns. So this is the way that I'm working for you to grow your wealth, and also for me to grow my wealth. I want to thank you for your trust. Thank you for copying me on eToro. Thank you for following me. Thank you for following me on my social media. I hope that this work that I'm putting into growing our wealth, that I hope that you appreciate it. I appreciate you to be there copying and supporting me. And so thank you for your trust. And remember that this is not legal. This is not legal advice, and that past performance is not guaranteed for future returns. And if you want to get in touch with me, remember that my eToro is 𝑐𝙂𝙀, and you can also find me on Instagram and Threads. Thank you very much for seeing this video, and I hope to see you soon.